We're moving the rents. We've renovated 20 units already. We're getting at or above pro forma, which is, usually the case everywhere right now.
Yeah.
It's not hard to get rents, right? Supply is at an all-time low and demand's at an all-time high. I think with interest rates going up, it bodes even better, I think, for multifamily, right? You're going to have people who were buyers now turning into renters, right? Mortgages are getting a little bit more unaffordable, so.
Welcome to Multifamily Method, a podcast which explores the state of the multifamily real estate market and some of the backgrounds, methodologies, and words of wisdom from some of today's most successful multifamily real estate entrepreneurs nationwide.
Hi, I'm Jad Risha, host of the Multifamily Method. Thanks for joining us. Today, we're going to be interviewing Zamir Kazi, founder and CEO of ZMR Capital. Zamir started his career in real estate in 2013, buying and flipping duplexes in Lakeland, Florida. He subsequently formed ZMR Capital Group in 2014 to acquire and redevelop multifamily. In the past 8 years as CEO of ZMR, he has acquired over $2 billion in multifamily assets and is the recipient of Globestreet's 50 Under 40 and an active investor and board member of multiple early stage companies. Today, we'll discuss with Zamir some insight into how ZMR Capital has grown and where he plans to take the company into the future. Welcome to the podcast, Zamir.
Good, Jad. Thanks for having me on.
Zamir, we want to talk a little bit today about, your background personally, ZMR Capital, obviously what's going on in the market today, which is, I'm sure, a topic that everybody wants to hear about, or maybe they don't. And then just a little bit about, your view on multifamily and some of your background and on thoughts on business going forward. So without further ado, let's just get going. What's going on today, man? What are your views on what's going on in this market?
It's a very interesting time, right? It's like we were running a million miles an hour and all of a sudden had to pause, right? Interest rates volatility is obviously a huge concern. And then with an impending recession on the horizon, right? I think there's just a lot of worry on whether, look, are rents going to be able to sustain? And obviously, I don't think rent growth continues to go at such a clip that we've seen in the last 24 months. But I think the fundamentals are very strong for multifamily still. You've got, especially in the Sun Belt where we're all operating, right? You've got real growth and job growth. And it's just a matter of, look, what do companies do, right? And do they slow down hiring? Do they slow down their growth? And but really, I think the biggest question mark is interest rates and debt. Right? You've got the debt so volatile, and which makes it hard to pinpoint. Where does pricing ultimately shake out, right? Because we don't know where spreads are going to be, and I think you've got a lot of people and buyers that were higher leverage buyers, and those options are no longer available. So, if you can't get your yields to work in 55-60% Freddie Fannie today, then you're really probably not buying deals, right?
Right.
So, we're still active. We're still looking. We've got capital partners that are out there that, want to do deals. Obviously, they want to do good deals to get people excited in today's market. But look, we're still out there grinding away.
So you guys were one of the more active buyers in, probably the first half of the year and even maybe the last half of last year. So tell me, how much did you, how many assets and total value were you able to acquire in that time period? And then sort of talk to me about, like you mentioned, the slamming on the brakes and how that materialized, in the last 90 days or whatever.
Yeah. So, we have been very active. I'd say in the last 12 months, we purchased about $1.5 billion of acquisitions. I'd say unit wise, it might be 6,000 units in 12 months. We purchased in Florida, Texas, Georgia, Arizona, Nevada, which is a new market for us. We've definitely been one of the more active groups, been out there hustling.
And then, so did you have any deals going? I guess, did any deals go sideways when the market shifted? Were you under contract on anything? Were you chasing any specific deals? What did that look like? What did that 30-day time period look for you guys internally? And what were some of those conversations with not just your acquisitions guys, but also some of your, lenders and capital partners as well?
Yeah. So, given how fast we've been running, we kind of have been in this proverbial at least 5 deals under contract at a time. At one point in March or April, we had 9 deals tied up.
Jeez.
Yeah. So it was kind of impossible for us to not get caught with our pants down, and so we had, when the world changed, we had 9, that was when we had 9 deals, and we ended up getting 6 across the finish line, thankfully. Okay. 3 of those we're still actively working on. 1, we finally got the equity tied up, and we're closing next week, which, we're very thankful and glad we were able to get across the finish line. We had multiple things happen. Equity backed out completely. And I think what you're seeing across the board today is 99.9% of equity partners out there are on the sidelines, right? Everyone's kind of, they're again, just it's wait and see mode. People don't want to catch the falling knife. The people that are active, I think today, are probably more the people that are either have discretionary funds themselves or are syndicating. And then debt changed dramatically, right? Where we had 75% leverage, 70% leverage, and spreads in the high 200s. And then all of a sudden, lender comes back, hey, we're not only dropping proceeds by 10%, we're also kicking up your spread by 100 basis points, right? So it just made deals impossible to pencil. And, where we were able to buy, 3 caps 90 days ago, that's just no longer the case, given negative leverage and where spreads are at SOFR, where SOFR is gone and is going, right? You have another 75 to 100 basis points increase this week alone. So,
right. And the rate caps on the bridge debt that just became punitive, right?
It's insane, right? And then you even if you're buying, a 2-year rate cap, you're going to have to buy another one in year 3, and then who knows how much the cost of rate caps are going to be then. So there's just the volatility in the rate cap market is insane as well.
Yeah. I think we're probably at least through the balance of the summer going to be in the same environment. Although part of me thinks that, and tell me your thoughts. Part of me thinks that some people have just taken it as an excuse to take a couple of extra vacations this summer and we'll see what happens when the leaves turn and if the market settles down a little bit. I mean, there's such a herd mentality in our business. I don't know. What are your thoughts on that?
1,000%. I agree. So look, I think we've all been kind of going a million miles an hour the last 24 months, right? Ever since COVID kind of settled down a bit and we had this boom of activity. So I feel like August is, no one wants to work anyway in August and they want to go on vacation. And that's probably more so true given, there was a year of none of us could travel, right? And then we all went so hard work-wise, and this is really the first vacation anyone had been able to take in the last 2 years. So I think it's just perfect timing for people to say, look, it's summer, let's take a pause. The reality of it is, in my opinion, I think September after Labor Day is going to pick back up. There's a ton of capital out there, right? Both in equity and debt. And I think once there's just some more data points for as far as, okay, this is where deals are trading. This is where cap rates are moved. This is where, debt is finally where we think is going to be. And everyone's going to jump back in. Right.
And I think maybe the realization of some owners that even if I don't get January pricing, I'm still making 35% more than what I bought it for 3 years ago. And that's probably still a pretty good trade for me. And maybe I should just go ahead and execute, right?
Well, that's the biggest thing, right? I think sellers are the slowest to react to this kind of stuff. And what we've seen is, look, as much as anyone hates to do it, we've had to go back for repricing and more institutional buyers or sellers are inclined to, react with the market, right? They're saying, okay, look, we're in the market. We understand what's happening. We're market sellers. we understand it, we'll sell it. And I think the more mom and pop or less institutional seller there is, they are slower to realize, okay, well, I got BOVs at 100 million 90 days ago. Now my BOVs at 85. The market's going to come back, or this is going to change. And I don't think that's the case. And I think the sooner sellers realize that, okay, it's just a different market today, I think the sooner we can all get back to business,
Right. Cool. So you talked about buying 6,000 units last year. What's the best deal you did that you would say in the last 12 years? And for whatever reason that it was your favorite year, whether it was, price point or just the asset itself or a fun story.
Obviously I like to say they were all the best deals.
Your partners, I'm sure.
Every single one's a great deal for whoever's listening. So, I would say that's a good question. So we closed on a deal in Vegas, literally last month, I think, or beginning of June.
Okay.
And so it was a 90s deal. The seller went to one of our debt brokers. So this kind of goes out to say you should definitely use, some people like to, source debt themselves and not go through a broker to save a fee. I think, having the relationships out in the market, whether it's through the sales investment sales side or the debt brokerage side, is very important. But the broker's client, this guy has owned this property for 30 years, right? Bought it from the developer, was planning to hold this for his retirement, went to refinance with one of our guys at Newmark, and he couldn't get the debt he wanted because the debt markets were so volatile, and he needed to cash out. So the broker goes, look, one of my other clients is very active. You should just sell him this deal. Brings us the deal completely off market. And, he set the price. We didn't set the price. And the guy asked for, I think it was like $170K a door in Vegas, and nothing in the last 4 years has traded below 200 a door in that market for a 90s deal. So we feel that we stole that deal. I mean, it was 100% classics, never been touched. The guy just spent $500,000 on landscaping just to little things here and there because it was his baby, right. But really didn't do any of the value add. So, we could have flipped that contract the next day for $55K a door more, I think, if we wanted to. So that was a really good one, amongst others.
When did you close that one?
10 weeks ago.
Okay. Have you already been able to see? I'm assuming you're already moving the rents, and
we're moving the rents. We've renovated 20 units already. We're getting at or above pro forma, which is usually the case everywhere right now.
Yeah.
It's not hard to get rents right. Supply is at an all-time low and demand's at an all-time high. I think with interest rates going up, it bodes even better. I think for multifamily, right? You're going to have people who were buyers now turning into renters, right? Mortgages are getting a little bit more unaffordable. So
how many, I guess, what is the allocation in your portfolio of what you would call more like core stabilized deals versus value add deals?
So we've historically just been value add players, right? Okay. So I would say 98% of our portfolio is value add. We have just started getting into core plus and core opportunities.
Okay.
I would say the shift really has been, there's been no differentiation on cap rate between vintage, right? And the mark to market play is so tremendous these days, where you can get $300-400 on mark to market, right? On a new deal, really spend nothing, and you've got the same amount of rent growth and rent increases as a value add deal. So you're not taking the vintage risk, right? And you're still getting the same yield. So I think the focus for us has really changed. So we've done historically just 70s, 80s deals. Now we're more 90s and newer, and really ideally 2000s and newer, right? We want to buy newer stuff.
Okay.
Like the quality.
Yeah. So one of my clients who has historically been like a big renovator, repositioner really on assets and kind of in and out in 12 to 24 months has recently told me that he's no longer doing value add deals because he just can't get the labor in place to effectively execute his business plan. So I'm curious if since that's the majority of your portfolio, talk to me about if you're seeing any of that, and then if there's any, if any of your markets that you're working in are better than the others, and also sort of even before you get into that, how you're executing that. Do you have a construction management in-house, kind of, soup to nuts, how you're executing your value add, and then also, what you're seeing from market to market in labor and supply?
Yeah. So we do have a full construction management team in-house. We've got 2 construction managers, probably 5 or 6 project managers, a transaction coordinator. So we've got a pretty solid team that manages the day-to-day for the renovations. I would say we are on the lucky side. I'm hearing the same things from a lot of groups, but I just think we've been able to provide so much work to our vendors. They have made it a priority to make us priority.
Okay.
And they're allocating resources to us. So we know we have kind of the go forward. I mean, we're renovating probably 300 units a month right now, right? So we've got vendors that are, maybe more, that are just kind of allocated to us, and we have dedicated teams that are on the sub side. Florida for us, just given that we're local, right? Our headquarters are in Tampa. Most of our portfolio, I'd say 50% of our portfolio is Florida based. So I would say, Florida is easier than other markets for us just because it's our backyard, but We're not really having much trouble elsewhere either. We have boots on the ground in every market from our team, which brings kind of local vendor relationships, and which we've just been able to leverage kind of, our relationships. And I think, again, in this time, just on all sides of it, with supply being, hard, and just supply chains being disrupted, and labor markets are hard, and, the debt's crazy, and equity relationships right now are probably more important than ever, right? It goes back to show, how much of a relationship oriented business this is.
Yeah. Yeah. And you guys are, well, I think this is actually a good point to start and just kind of go back and have you tell me a little bit about kind of how you started the company and the evolution. Because when we first became kind of introduced, it was Berkshire Property Holdings, right? Was that the first name of, and you guys bought like a little deal down in Sarasota or whatever, if I remember correctly. And was, I think, just raising friends and family capital, if I remember correctly. So talk to me about, how you got into it, how you started the company, and take me through the whole evolution to, really where you are today.
Yeah. So, interesting story. So I grew up in Orlando, was born and raised in Kissimmee, actually, right next to your deal.
Perfect.
That you're bringing.
Then you got to buy it. Then you got to buy it.
A quarter mile. Dad still lives around the corner, right? Sister's still right there. So, that's my stomping grounds. The schools that was zoned for is where I went to, and went to Florida State for college.
Okay.
Did pre-med, as all Indian families are, forced you to be a doctor, lawyer, engineer. These are really your only three options.
Right.
Senior year, I decided, look, this is not for me. I don't want to do this. I don't want to be in school for, another 10 years. I want to get out. My dad was an entrepreneur, and I wanted to be in business. So we got into an argument, and my way of retaliation was dropping out of college my senior year. So I went on to work at a restaurant in Orlando, NBA City at City Walk. I was a server there for a little bit, got fired. Turns out serving is not my thing. And then I started working at a sales company. I was selling vacation packages for a little bit. Started making some money, and my dad was like, we obviously were very close. My dad and I, my dad's like, look, you should start investing into real estate. The people build generational wealth, and this is what you should start doing. So I call one of my best friends who I grew up with, Philip, who now works for us.
Right.
I was like, look, I have like 25 grand, go find me a deal. I want to get some cash flow. And so he finds me a $20,000 duplex in Lakeland, Florida. It was a short sale. And
what year was this?
This was in 2013.
Okay.
Rents were $500 on one side, $300 on the other side.
Okay.
So went in and really didn't know anything about real estate at the time. Went on like Bigger Pockets and read books and YouTube videos, and a plumber wanted to charge me like $250 for the thermostat, for the water heater. And I was like, oh, this is too much. I went to Home Depot. The guy taught me how to change the thermostat. It was $20. And then I was like, oh, this is pretty easy. So I decided to renovate the whole thing myself. Went on YouTube, learned how to make cabinets and all that kind of stuff. And so I just started off buying twos, bought the one next door to that and then flipped it out of that and bought the one next door. And then twos turned into fours, and then fours turned into 20, which was that Sarasota deal.
Right.
We bought a deal and, so it's nothing crazy, just kind of organically just bought and sold, bankrolled a lot of it myself. And then started raising money from friends and family. And then 7 years ago, I moved from Florida to Los Angeles.
Okay.
Came out for vacation, loved it. The weather was great. Huge Lakers fan at the time, still am. Really started to, I didn't grow up around money, and my friends and family, that money started tapping out really quickly. And I met a lot of really great people here that, again, I didn't finish school. I don't have a finance background, and really found some mentors and friends that just helped me along the way and really helped me to start changing the way I was thinking and institutionalize myself and start buying bigger deals. And met a good buddy of mine, Safe, and he was a private equity guy. And he's like, look, it's just as easy. It might be even easier to do a $40 million deal than it is doing a $2 million deal, right? It's easier to raise 10 million than it is 2 million. So I went and found me a $40 million deal, and this is 2018, found a deal in Atlanta, and I used my cold calling background, went down a list of 2,000 private equity firms that invest in real estate, and I had 2 days left before I had to go hard, and found an equity partner, stroked a $15 million check, and
that's great.
The rest was history, man.
Yeah. That's great. It's fun. It's fun and nerve wracking when it's like you're under the gun like that, right?
Yeah. I mean, but you know what? I feel like it's when I perform the best is having your back against the wall. And then, the team, we were able to build a incredible team. So we were able to, basically, there was a company that decided at one point they had 20,000 plus units. They decided to wind down their portfolio in 2018. And I was able to hire one of their top guys, and then pretty much 20 people followed from that company over the last 2 years.
Those guys are all sprinkled out all over the market.
They are. I think like, there's, I'd say 3 shops are beneficiaries of that unwinding, but we really feel like we got to handpick some of the best talent from that group. And that's been a huge catalyst for us, right? Because not only did we start to do bigger deals and have a track record, but now our team is in place. And it's no longer just myself. And, that's been another huge component to our growth.
Yeah, no, I mean, look, we joke about it a lot, but a lot of really bright people came out of that shop. And obviously most of them are here in Tampa, so I'm buddies with a lot of them. And it's sort of interesting to see how that's all kind of evolved and where they've gone and what that's, how they've really kind of made their own kind of names and staked their own case in the marketplace since that place sort of dissolved, or I guess they're still in existence, but not really in growth mode or anything like that. All of that was a great, it's a great success story, but I know it wasn't that easy because it never is, right? So like, talk to me about maybe some of the biggest struggles you had, I guess, just getting started, aside from the fact that like you didn't know what you were doing and you were, having the YouTube stuff, and really some of the, maybe intermediate struggles to take it from, buying 2s and 4s to now, buying $1.5 billion. Even if you just pick out maybe 2 or 3 things that you jump out to you that were kind of the biggest hurdles you had to overcome.
Yeah. So I think the biggest challenge was I think it's twofold, right? So getting deals was impossible, right, for us. Getting awarded deals, and obviously in a market where you guys know, right? There's so much competition, and a guy comes out of nowhere, and you have no track record, right? Especially forget about closing deals, but you have no track record on the investment sales side. So when you're bidding with 50 other people who have a track record and have bought deals before, I mean, it was just difficult, right?
Right.
Even if our offer was a strong one and we were, top of the pack, hard money and all that, I think just the confidence wasn't there, where the brokers weren't confident and nor were the sellers and who we were. So finding a deal was tough, right? I think especially even when I was like, okay, well, we're going to go from doing small deals to doing bigger deals. Great. I want to do that. But the reality of it is how am I going to get a deal awarded? Right.
Right.
I think that was one of the bigger pain points for us. Bringing Chip on was great for us because it brought validity, right, within that market.
I said that to you, but not to you, but I said that to the guys in my office, by the way, when they brought Chip on, because everybody knows Chip.
Exactly. I mean, the guy stole $2 billion plus of assets, right? And so it's like, okay, we know him, we trust him, and it kind of put a little stamp on us. And then flip side too is now then when you finally get a deal, right? The equity, right? There's no track record on the equity side, so it's like, okay, well now you're going from 2 million to 40 million. I mean, who are you? What have you done? What can you justify? Like, what are you even putting 10% skin in the game like that? It was not an easy raise. Our equity partner actually required me to move or at least spend 2 weeks out of the month in Atlanta. And because it was our deal there and I didn't live there. So they bet on me as a person. Obviously we didn't have a track record as a company. So that was, I mean, those were hard times. And I think that's why it took so long to kind of get kickstarted. But now that, now that we're in, and we're moving. So, but and I think a lot of people think, okay, you came out of nowhere, right? Over the last year and a half, but I've been at this for 10 years almost,
right.
Really trying to break through, and it just kind of started to happen.
So what was the first deal that you were awarded in a competitive situation?
Yeah. So that the competitive situation, I would say, this is the small deal would be the Philippine Shores deal in Sarasota. Okay. That was the first deal. We were in a competitive situation. Now it was awarded to us because, we had gained confidence. I think the deal was small. It was $2 million deal. But we had just sold our duplexes and quads through Marcus and Millichap. So we had some sort of,
some track record with
exactly
that.
With them on the sales side.
Yeah.
So they were like, look, these guys just sold a bunch of deals. And they can close on this. We know they can because we just, so that was it. And then the $40 million deal, in Atlanta which was our first deal. I actually flew in to Atlanta to meet with the seller, kind of went behind the broker. And I was like, hey, look, I'm young, I'm hungry. I'm going to close on this, just I need someone to put some trust into myself and faith that this is going to happen, and I won't let you down. And he did. He trusted me. And
that was a fully marketed competitive situation.
It was a fully marketed deal. Yeah.
That's awesome.
Yeah.
That's awesome. Great. So where'd you get your work ethic from? Where'd you get your sort of like passion and drive from? Because, it would have been easy to just go the doctor route and like the family wanted, right?
Yeah. So my grandfather, he's the hardest working person I know. He's 88 years old right now, still doesn't sit down, gardens and walks 2 or 3 times a day. He has a Bowflex in his garage. He's still working out. He still reads. He's always learning. Language is his passion. He moved from India to Europe. He's a pipe fitter, welder. Yeah. And worked every day till, he was 60 years old and hard work, labor. And so, he's one of the smartest, hardest working guys that I know, and definitely got it from him.
Did you grow up around him?
You spend a lot of time together. Yeah. My dad's also a very hard worker. I think I got my business sense from my dad.
Okay.
But I got my work ethic from my grandfather.
Okay. Cool. So the company's grown now. How many people on staff do you have?
27 people and 9,000 units.
27 people and 9,000 units, probably about close to 2 billion under management. Okay, cool. So your day probably is a lot different than what it looked like 5 years ago, 10 years ago when you were first getting started. So what are you focused on, day to day, running the business? And then, sort of what are some of the biggest challenges that you have to face running a company, not buying deals necessarily, but actually running a company and having people that you're responsible for? And then are there any aspects of those early days that you miss now that you're running a bigger operation?
Yeah. I was talking to Colt on our team about this the other day, and this is no offense to anyone on our team, but I remember the days when all we had to worry about was the deal, right? And now it's the deal and the people, right? So we've got 30 people now that we've got to also manage personalities and just everything on that end. So it has and one thing that I'm making a conscious effort of is you've got to also run the business, right? And it's a real business now. And so bringing in people to kind of do some of the day-to-day stuff that I probably don't need to do is very important, because I need to focus on the bigger picture, right? I think my day now, we have a huddle with our team, kind of talk about the big things that are going on, both on the acquisitions, on the asset management, on construction management, any other issues we may be having, and just kind of tackling those out daily. And then I'm talking every day to new people, new groups, new equity partners. I think that takes up a lot of my time. Just
probably more now than 90 days ago, right?
Especially more now than ever, because every group out there. But I'd say I talk to at least 5 new groups a day, right?
Okay.
Making those relationships, and then going back out to right now is reaching out to brokers and sellers and other groups that I know, right? That just, what are you seeing, right? What are you hearing? And just kind of macro, right? What's happening in the world and where we think things are going, and how are you looking at things, and how are we looking at things? And but yeah, just and then dealing with the portfolio right now. I think portfolio performance right now is more important than ever, right?
Right.
And one of the biggest, I wouldn't say knocks that we've gotten, but the one thing that's always been brought up is, okay, well, look, you started this in 2013, you haven't gone through a downturn yet. Well, here we are, right? And so I think performance for us and getting through this time is going to be imperative, right? So we're very, very focused on occupancy and collections right now, making sure that we're in a good spot, and if things do take a change, and we can weather the storm, right? That's very important.
So how many different, I guess, equity partners are you currently invested with across your portfolio?
I would say we probably work with 10 or 12 different equity partners. Okay.
And of those, how would you characterize like institutional or private equity, or what would that break the allocation look like?
I would say it's all institutional. Private equity funds, but mostly institutional capital. We've got a couple family offices that we work with, which we transferred from self-funding to friends and family. We then got into family office, and then went away from family office for a little bit to more institutional capital. But look, family office capital is probably the best capital to go for. It's just with the growth that we had, family office, they don't have a mandate to put out equity, right? It's their money. Their teams are very nimble. So it's more of a human capital a resource issue versus actual money. And they can't focus on more than one deal at a time usually, right? So their teams are just small and can't handle the capacity. So for us to be able to grow as fast as we wanted, we had to go institutional. And look, we have great partners, and we really enjoy working with them, and we've been able to grow with them.
So I bring you a deal, Central Florida, new construction, et cetera, et cetera. I mean, or whatever the deal profile. In your mind, do you know I'm going to this group for this deal? Are you having multiple conversations before you commit the deal to an equity partner? Because if you've got 10 different groups that you have good relationships with, obviously now is a different time, but I would guess when the market was active, everybody was probably wanting to try and get in on all these deals.
Yeah. So, when the market was very active, I think we would basically before tying up a deal, we'd usually have a couple of groups that we would, float the deal to and say, okay, is there interest, right? We have a hot list, like let's just call it 10 groups that I know, okay, this is a core plus deal. These guys like this market. They want this vintage. They like the size of this equity check. This is going to be a good fit for you. And then just see kind of gauge interest, right? Like, okay, before going into offering, we know that we at least have 2 or 3 groups that really want to do this deal, right?
Right.
Now it's probably more than that. But yeah, you kind of, the benefit of doing this for every day for the last, 5-6 years, talking to equity groups, it's, who wants what, right? You've built that relationship already, and it's easy to kind of marry groups with deals. Now it's probably got to cast a wider net, but yeah.
And so are you same terms on every, if you go do a deal with ABC Equity, are you doing is it the same effectively operating agreement on every deal?
No.
Is it deal by deal?
Yeah, no, it's deal by deal. I think, look, the benefit of a syndicator or someone who's raising money from private capital, you can have a standard JVA. You've got your standard waterfall, your standard structure, right? When someone's writing $100,000, $200,000 check, they can't really dictate terms, right? So it's your terms, and you're going to put out whatever structure you want. With the institutional side, they're writing 90-95% of the equity check.
Right.
They're going to dictate terms, and the terms are, look, I think there's market, right? Which I would say is between 8 to 10% pref, and then you've got 80-20 over, and maybe a couple of hurdles, and then there's other groups that'll be out of market, right? But I'd say most of those groups are going to be within that range, and pay you pretty much the same amount of fees. There's some fluctuation. Obviously, there's negotiating that occurs and takes place. But every JVA is different. Every group wants something different, and there's no template, I'd say. But what the benefit is once you nail down a JVA with one group, you've got the docs down, right? So now moving forward, you never have to negotiate those docs again, and you have it in place. Right.
Okay. So you're almost 10 years in now. You've built up this portfolio of assets. You've got a 27-person company running, and that's a massive transformation from where you started buying, duplexes in Lakeland in 2013. So what is the vision for ZMR for the next 5 to 10 years going forward?
So, I'll tell you short term, we want to be at 20,000 units like tomorrow. Really, if we can get there the next 18 months to 24 months, we'd be very happy. I think 24 months is max where we would like to be there. So ideally 18 months, we can hit, 20,000 units. I think that's the number that we have in our head where, you're generating enough, you have enough AUM to generate enough fees, and it's, the company's really moving at that time, and you have some scale. And then, I think the next 5 years, we really want to get into development as well, and start doing some ground up. We just tied up our first build to rent single family rental deal in Orlando. We're going to build 100 single family homes. So we're excited about that. And, look, I think
I've got a site for you, by the way.
Thank you.
I got a site for you. We can look at.
You do?
I'll send you another site. Yeah. We've got a built to rent site in up in Central Florida as well.
Okay, cool.
Yeah.
So, one thing I love about real estate is look, there's always something to get into. It's always something new. Maybe we'll do industrial self-storage. Who knows? I think the one thing I don't want to be is stuck in my ways and kind of be like, okay, we're rigid and this is all we're doing. We want to kind of be fluid and, just continue to grow, right? I think just be better than we were yesterday and continue that growth. And as long as I think we can compound on that, I will be in a good spot.
So why a transition into development?
Look, I think we want some diversity. We have deals that have current yield, but then there's just more upside in development, right? And I think we're being in conversations with equity daily, right? What I'm noticing is a lot of people have been shifting more towards development, right? And there's more of an appetite for development because if you think about it, everything we're buying these days is above replacement cost, right?
Right.
And so you're buying above replacement cost for older deals, right?
Right.
When I can build brand new and be below replacement cost, and there's immediate equity day one, right? So right. You don't have yield the first couple of years because you're building, but once you're in, you can build to a decent cap rate. Your yield on cost is much higher. And again, like just having the diversification where we're not a one-trick pony. And if equity is, down in one segment and higher in the other at one time, we always have something going. Yeah.
Right. And it sounds like you guys have become pretty well-versed in how to raise capital.
Yeah, I think we've done a pretty good job at it so far, and again, just building the right relationships and being out there is the biggest thing.
Yeah, cool. Let's take like a 2-minute break, and then we'll just kind of we'll go into maybe a couple more questions about market. I'm going to ask you some questions on like brokerage experiences, working with different brokers and stuff, and then we can just kind of like. Probably another, and then do that rapid fire and just kind of round it out.
Multifamily Method is powered by Capstone Companies, the largest privately owned multifamily investment sales brokerage nationwide. Capstone Companies provides dedicated coverage to both primary and secondary markets throughout the Southeast, Mid-Atlantic, and Midwest regions of the United States. Whether buying, selling, or refinancing, Capstone Companies is here to help. Simply put, Capstone is expertise, experience, extra mile. If you're interested in having Capstone provide a complimentary opinion of value on your multifamily asset, please visit us at capstone-companies.com.
Welcome back. We've got continuing our conversation with Zamir Kazi from ZMR Capital. And I'm going to ask Zamir some tough questions now. Names can be omitted, but since this is a brokerage firm podcast, what I want to hear from you, and pull no punches, is the best experience you've had with a broker. I definitely want you to omit the name there if it's not us. And the worst experience you've had with a broker, whether it be a deal that you bought or a deal that you didn't buy. And then, I'm sort of joking, but also just kind of help inform like whoever might be listening, sort of what are the things that you guys appreciate in the brokerage community, the types of, characteristics and character and just have a conversation around that.
Good question. Tough question. And I feel like, if I divulge too much, they'll know exactly who I'm talking about. So
they can know it as long as everybody else doesn't know it. Yeah.
So, I don't know if this is more the broker or the seller, right? And obviously we blame the broker if the seller doesn't do what we want them to do.
Always. Yeah.
So, but I'll tell you, also, I'll give you an example. Here's, we had a deal last year where we, it's the end of the year, trying to close this thing on time. None of the none of the debt shops wanted to do anything at the end of the year in December. They were just like, look, we hit our bonuses. We don't want to work, and let's try to add this on the pipeline for January. So, and we tied it up in November. And so we had less than 60 days to close. I think it was like a 45-day close. Since we tied it up, it was a quick timeline. Okay. And our preferred lender completely was out, and they were like, look, we had to go somewhere else. And so I call the broker, and I'm like, hey, we need some more time. Can we push this to January 1st? Right. And our closing date was like December 24th or 3rd. Right. And instead of going to the seller and asking, he straight up told us no. I'm like, well, you didn't even relay the message. Right. And he's like, no, I know the seller's going to say no and blah, blah, blah. And I'm like, no, well, you just don't know that because you haven't asked. Right. So it was a contentious deal for us because the seller genuinely was not going to give us the time. And he's like, look, if you don't close, I have tax implications for the first, and I have money earmarked here, and I'll just keep your deposit. Right. And it was the worst experience I've had with a seller, ever. Just no flexibility. We weren't asking for anything, but it was the holidays, right? Like, okay, let's just get Christmas and New Year's, and we can close right when we get back. And no budging, no willingness to move.
Yeah, it's miserable closing the deal between Christmas.
Oh, it's
and
the
New
worst.
Year's.
It's the absolute worst, right? And we even going before, we were like, look, we'll do everything we can to get it done. I can't guarantee it. And the initial conversation with the broker was, look, if you needed more time, I don't see any problem with getting it. And it just turned out to be a whole different story. And it just seemed like, we were fighting with the broker and versus even the seller. It was, the broker was not willing to help us or try to go to the seller with our asks, which just seemed like it was weird.
Right. And then what about some of the better experiences or that you've had, or the best experience you've had in trying to buy a deal?
I think the best experiences that we've had are where the broker, so a lot of brokers try to, they don't want to, I don't know if they don't want to put both parties in touch with each other, but when I find the best and smoothest experience is when the broker is like, look, this is my client, they're a good friend of mine. You're my client, you're a good friend of mine. Let's put you guys together and, in a room or on a call. And let's just kind of, there's an open line of communication, right. Between everyone. And I think that's the best thing, especially like now, right. We all know it's a weird market, and I think everyone's understanding of that. But as long as we can communicate early on, and you're not sandbagging information, and it can be an open, hey, there's problems arising and whatnot, then I think everyone's happy, right? Because look, the reality of it is we're all gonna transact with each other again, right? We're gonna cross paths at some point, so you want things to be friendly and yeah.
So you've been obviously.
Actually, sorry. There was one time that I would say the best thing that's ever happened on the broker side is we had a deal. Someone in Atlanta, and this broker brought me a seller, and he actually brought me two sellers that both flaked. One, both put up hard money. We got to keep the deposit, and the second one, the guy fought his deposit. He released the deposit to us, and he put a list pendant on the property. And the broker was so, I guess, embarrassed by the fact that he brought us a not a great buyer, right? Brought us another buyer, didn't charge us a fee, and reimbursed us what we had to refund the old buyer for his deposit. So yeah, the guy, the really stand up move, and something we won't forget. And obviously we've given him a lot of business on the sales side now. And, but it was a really, that was by far the best thing I've seen a broker do.
How many deals have you exited in this cycle, or since you've, built the company up to these larger deals, I would say? Yeah.
So the little deals I wouldn't count. I'd say exits. We've sold, maybe 7-8 deals.
Okay.
And then we're selling one, hopefully knock on wood, closes next week. we'll probably exit out of 4 or 5 more before the end of the year.
Got it. And then, I guess just what, like from a seller's perspective, what is the most like, what do you appreciate most from a broker, or the 2 or 3 things in terms of how they, whether it's how they conduct themselves or how they conduct their process?
I think it's how they conduct their process is very important. We've seen a few processes that aren't, super tight and aren't organized. I think, coming back with data, like, okay, this is how many tours we had this week. This is how many, CAs we got. This is how many, this is what we've done. And then I think, what's more appreciated is brokers who are obviously, knowing who your buyers are when you're coming, right? Like, we just sold a deal in Texas, and the broker was like, look, it was the second best offer. It wasn't the highest offer we got, but the first offer, he's like, look, I don't know these guys. They've never transacted. But the second group, I know they're going to be good, right? They're not going to retrade you. They're not going to, come back and ask that. They're just solid. This is a solid group, right? And that's something that we don't know, not being in the market, as often as you guys are. And I think just having that candid conversation, but again, just having an open conversation, right? Like, I don't want brokers. You see a lot of brokers, BOV, crazy numbers, and they're just doing it to get a listing, right? I want reality, like, be real, right? Like, tell me, okay, this is where we are today. This is what we think we're going to get. Don't sugarcoat it, right? And I think I would take that over someone who's going to
transparency.
Exactly, yeah. Transparency is what you want.
Yeah, cool. All right, I'm going to give you an opportunity to ask me any question that you might have for me about either Capstone or just the business in general, since I've been peppering you though for the last
No. So talk to me about you, man. Like, how'd you get into, where you are, how long you been at Capstone, and what made you choose brokerage?
Yeah.
That was on your side. Wow.
I don't know. I mean, I think you're doing all right too, but I'll get just the high level. And actually, I don't know that I've kind of told this story in this forum, but it's the conversation I have every time I meet a new client. Basically, is I started doing general commercial real estate. Like I started flipping houses in like 2006, 7, 8. And that was good for a little bit until it wasn't anymore. And then, the subprime market crashed and sort of just kind of just tried to survive the next couple of years. And then 2008, I had a buddy who's an old football player, and he wanted to start doing some investing. So we started doing some general commercial investing, and it was good, but we weren't doing enough volume for me to make a living. So I met a guy who had done multifamily investment sales, and he wanted to get back into it, and we started a team. He was in Orlando and I was in Tampa, and we started a team just on our own, basically. And then we did that for a couple of years until we got it, kind of like how you started. We were selling little deals and 12s and 14s and 22s and whatever we could get our hands on. And then 2014, I met the founders at Capstone at the NMHC conference before it got big. It was at the old I think it was Palm Beach or Boca. I can't remember, the old like Boca Country Club maybe or something. It's tiny. People like spilling out of the halls. Like there was no room at this place. It had gotten too big. But we met those guys there, and they were looking to get into Florida. And we were looking for a real multifamily platform. And so summer of 2014, we sort of brought the whole team over, which at the time was like 4 or 5 of us in Florida. We were the first. Tampa was the first office outside of Charlotte. So the first expansion office for Capstone. And now we are, 14 offices in 8 different states. It might be even more than that. We just keep growing. And we are the largest privately owned multifamily investment sales firm in the country. So it's been fun to see, be a little part of going from like what felt like really, really kind of mom and pop to now, we're in and we're competing with a lot of the, major national groups that are out there. We're certainly, take our fair share of losses, but we're in the competition, and the best thing about it is that, the validation that we get from doing deals with groups that have been in the business 10, 20, 30 years, and the fact that they tell us, that we're professional and we run a professional process, and just the fact that they give us the confidence to hire us on their assignments. So, I mean, that's kind of like, the polished elevator pitch. The reality is it's been a grind, and it's still a grind. And like you said, it's a challenge winning assignments when, nobody knows who you are, or it's just easier to go hire, CBRE or Cushman or whoever. And, we really have to go hustle and grind to try and, drive the wedge in between that relationship and show them why, that they'll do better by hiring us, whether or not whether it's, we know the market more, or we're just going to grind it harder because we're not complacent. We're not driving around in our Ferraris like some of our competitors are. We just, so that's the fun part. That's the fun part. And we've grown this office now. We've got 5 or 6 guys in Florida. We're selling as much land, I think, right now as anybody in Florida for development, which we're excited about. We think that's obviously a great way to build a pipeline going forward with the development community. And so we're starting to close some of those deals, and hopefully that'll bear fruit in the coming years, and just trying to be good guys and hustle and do what we say we do, and build good relationships with guys like yourself.
That's great. So how do you differentiate yourself? Like someone's been using someone to sell CB. Like, how do you take that business? I really for me, it's just, I don't know any way other do it. It's just the long game. Just build a relationship and just, get them to, the more time you spend around people, the more you really see who they are. Like, it's not going to happen in an hour or a day or a week. So it's just, it's just time spent invested into building the relationship. And then once you build a trust, obviously the baseline is that what you're talking about, and you're competent and you're proficient at your task, right? Sure.
And then it's just, people like to do business with people that they like and they trust. And, I like to think we're likable guys, and I know we're trustworthy guys because we don't have anybody that's not really trustworthy in our firm. I mean, that's been part of our ethos. So, if you're likable and you're trustworthy and people know that you know what you're talking about, then the opportunities will come, and you may have to be more patient than you want to be, and you can't get pissed off if you don't win the specific assignment that you felt like you wanted, because the next you throw a temper tantrum and then you don't get the one that was earmarked for you, which might be the very next one. Right. So
you burn the bridge, right? That's
right. So you just bust your ass and build relationships. And, there's a lot of guys here locally, like we talked about, who I've got good relationships with, and I've done business with less of them than I haven't, but I know I will, because we all get along and we're all good guys, and I want to say we're all the same age. I'm older than all of them, I think. But we're generally in the same age group. We all have kids around the same age. I just started a little later. And so you just keep going, and it's the long game. And, I'm going to do this till I'm not working anymore, really, or till or I should say, I'm going to be at Capstone until I'm out of brokerage, and I'm going to be in Tampa until they put me in a pine box, probably. So, so it's, you just keep going at it, and, you do things the right way, and, opportunities will present themselves.
Cool.
The best client, the best, I don't want to say the best client, the client who's given me the most business and who I've got the closest relationship with, I probably had lunch with him once a month for 3 or 4 years before we ever got an assignment from him. And we have now sold, I don't know, upwards of $250 million worth of assets for him, something along those lines.
That's incredible. Good for you.
So, I could get five,
work, man. You gotta put in the work.
if I could get 5 guys like that, would be all right. Cool. Well, let's round it out with some rapid fire.
Okay.
What is the best book that you've ever read that impacted you?
Shoe Dogs.
Okay.
Nice.
What is that? Tell me about it.
Shoe Dogs, Phil Knight. So it's a memoir by Phil Knight, the founder of Nike.
Got it.
And it's just a story about how he just got beat the hell up, man, throughout his entire, he started this company in the garage of his, or the basement of his parents' house, went in debt, couldn't pay his debtors back, went to the banks and just begged for money. His manufacturers screwed him just kind of along the way and built this enormous, incredible brand, the most recognizable logo in the world, probably, it's a book about perseverance and entrepreneurship, and I recommend it to anyone.
And how many entrepreneurs in the country, in the world, like have a similar story, right? It's not all sunshine and roses, right?
Yeah, and that's why. I've obviously read my fair share of kind of self-help or business improvement books. But I feel like the message is always kind of the same after a while, and they're again very useful. But what I've been reading now more so are memoirs and biographies, and because I think obviously all these people are super successful, but there's all this commonality between what they've been able to do and what they're going through and what we are as people. And I think you can always take and relate to what they've been through,
Cool.
Hopefully one day build something like Nike.
Yeah. Cool. Yeah. What's a podcast that you're listening to that you recommend to people in business?
I listen to Joe Rogan a lot. Just, it's not a business thing, but I really like his podcast. I honestly, I don't listen to too many podcasts besides that.
Okay.
I'd rather read books, time. I just had a baby, so time's kind of limited.
Congrats.
Yeah. Thank you. So I have a 6-month-old at home. So right now it's more reading, working, and baby time.
Cool. What's one piece of advice that somebody gave you that helped you get to where you are today?
Think big and don't limit yourself, right? I think you don't have limitations on your success or what you define as success. Because I remember when I first started doing this, my goal was $10,000 a month of mailbox money, right?
Yeah.
And had I stopped at my goal, I would have stopped a long time ago.
Who gave you that advice?
That was just, I think that was just, that advice was my buddy Safe.
Yeah. Okay.
So yeah, my buddy Safe to the private equity. He actually passed away last year in October.
Sorry.
But, yeah, no worries. I think just similarly to now, where at one point then the goal was 10,000 units. Now it's, who knows, right?
Right. If you could go back and change one thing throughout your career, what would it be and why?
I'm glad I did not become a doctor. It worked out for the best. I think the one thing I would have changed is I wouldn't have started off small. I would have went straight to buying bigger deals.
Yep.
Look, it's the same amount of work to do a bigger deal than it is a smaller deal, especially that time of the market. You could have closed your eyes, bought anything, put your finger on a map and done well. So I would have just started off with scale.
Got it. And last but not least, what's the one thing you've yet to accomplish that you want to pursue in the future? And it could be business or personal.
I feel like this might be a generic question. I feel like I've done a lot. I've traveled the world, and the one thing that I have yet to do is I think, again, I'm just starting my family, and I want to build a bigger family, and just raise good kids and create good little people.
Which is the hardest thing any of us will ever have to do.
Yeah. So hopefully I don't screw it up, right? And that's really it. I want to create the legacy.
Awesome, man. Awesome. Cool. Zamir, it's been fun, man. Really enjoyed the opportunity to chat with you today and get to know you a little bit better. I know we're all going to do some business together in the near future.
Can't wait.
Thanks for taking the time to join us today, man.
Likewise. I appreciate it, man. This was a lot of fun.
Thank you for listening to Multifamily Method. If If you enjoyed today's episode, please give us a rating and a review on Apple Podcasts. It helps our podcast get discovered by other savvy investors like yourself. Subscribe to Multifamily Method for free on your podcast platform of choice. Find out more about Capstone Companies at capstone-companies.com. Multifamily Method is executive produced by Capstone Companies. Audio production for the podcast provided by Andy Go of Gojo Studios, and video production by Yash Mystery of Mystery Projects.